Okay, so problem 6-24 class. I'll just do the discussion. The question here is, what is the estimated deficiency to unsecured creditors? And again, if the question asks for deficiency class, I just want you to approach it as being asked of your negative equity. If the question asks how much is your deficiency, we will treat it as being asked how much is your negative equity. And in solving for your negative equity, normally I would tell you to simply go back to your basic accounting equation, which is assets would be equal to your liabilities plus equity. So you will look for your assets, deduct your liabilities, and we expect our total liabilities to be greater than our assets, which would give us our negative equity. And that will already be our deficiency. But in this problem class, you are not given with your assets and liabilities, but there's a way for us to determine our negative equity, and that is to close all these gains and losses to your retained earnings account. Okay, so as it is per books, your capital stock is 350, and then your deficit is 54,250. Why is the 54,250 not in parentheses? Because it already states that it is a deficit. You're expected to know that that amount represents a negative retained earnings balance. It is a debit balance to your retained earnings. You're expected to know that already. Okay. Now all we've got to do is to close all these figures to your deficit or your retained earnings for you to determine your total negative equity. Okay. First item here is your estimated gain on realization from the land and the building. And what does gain do to your equity or your retained earnings? Does it increase or decrease? Increase. So you will have to add that 78,750. But be careful, do not just add that with 54 to 50. Why? Because supposedly your 54 to 50 is a negative amount. So be careful, class. You would get it wrong if you start with positive 54 to 50 and then you will add 78,750. Begin with negative 54,250. Okay, I hope you understand why we have to do that. Again, the amount there is a deficit. Next, you have estimated losses on various assets from the realization of various assets. What do losses do to your retained earnings balance or to your equity? It will decrease. So you're going to deduct this amount from your uh, retained earnings. So negative 54 to 50 plus 78,750 minus all this uh, minus all these losses from the realization of your assets. Okay. Now, we will also have to include these liquidating expenses, obviously. What's the effect of your liquidating expenses class to your equity? It will decrease. Okay. As far as entries are concerned, you will have to recognize an expense and credit the liability for the payment of these expenses. The same for your contingent liabilities class. The recognition of your contingent liability will require a recognition of a loss. And what does a loss do to your equity? Again, it will decrease your equity. So you will also have to deduct the 17,000 and the 26,250. Okay, so from negative 54 to 50 plus 78,750 minus all the rest of the figures in this problem class. Please give me the amount. No, just the deficit class. Input these figures: negative 54 to 50 plus 78,750 minus all the rest. You're already jumping to the answer. I'm just asking you to update your deficit class. The deficit before all the gains and losses was 54 to 50. You add the 78,750, you deduct the 23,100, the 84, the 21, the 170, the 57,500, the 17,500, and then the 26,250. 300. 355, 950. That is your updated deficit class. Okay, that will be your negative retained earnings. But again, what are we looking for? Are we just looking for our negative retained earnings? Are we just looking for the deficit? We're looking for your negative equity. Okay, what other account forms part of your equity? You have your capital stock, which is a credit balance, while your deficit of 355,950 is a debit balance. So what's the net amount of those two? It will give you 5,950, and that will be your negative equity, which will represent your estimated deficiency. But I just want you to understand what's happening here. These amounts do not go directly to your uh, equity without a specific destination class. They would, of course, be close to your retained earnings. But after closing these amounts, they would give you a significant amount of negative retained earnings to the point that your capital stock is not sufficient anymore. Plus, if you remember your quasi reorganization class in your intermediate accounting, what happens in quasi reorganization? You bring down your retained earnings to zero and you charge it to your share premium. Or sometimes you reduce the par value of your shares and you charge it against the your share capital. Okay? And normally that is done if your capital is sufficient to cover your retained earnings. Okay? But if your capital is sufficient to recover to cancel out your deficit. But in this scenario class, in corporate liquidation problems, normally even if you exhaust your capital, you will still not be able to cancel out your deficit because your deficit are so large in number that your capital will not be able to compensate for it. Okay. Again, if you are a financially distressed companies, you are a financially distressed company, you have options. Enter into debt restructuring agreements with your creditors, undertake quasi reorganization, or worst case scenario, you liquidate the entity. Okay, in this case, I just want you to understand that these losses will go to your retained earnings first. Okay, but your deficit is so big that your capital is no longer able to cover it, and that's why reorganization will not be an option for you. Okay, I hope you can remember your quasi reorganization. You have a deficit, you bring it down to zero, and you charge it either to your share premium or to your share capital. Can you remember your quasi reorganization? Uh, you remember you decrease the par value. Uh, then you transfer the excess to your share premium, and the share premium will be charged to cancel out your deficit. Okay. So again, going back to 6-24, the important thing here is that you understand that these amounts will go first to your retained earnings. Okay. 6-25. What is the estimated deficiency to unsecured creditors? Essentially the same problem. And we can solve this in two ways, class. Number one, the one I mentioned earlier, solve for your negative equity by using the basic accounting equation. And what is the basic accounting equation? Assets would be equal to your liabilities plus equity. So let's try to determine first what are our assets in this problem. First bullet, a mortgage payable of 350 secured by land and building valued at 560. So from this bullet, we will have an asset of 560. So please take note of that amount. Notes payable of 175 are secured by equipment valued at 140. So another source of asset would be our equipment with a value of 140. Assets other than those referred to have an estimated value of 157,500. Okay, so that would be another asset. And the last bullet, class, liabilities other than those referred to, total 420, which included claims with priority of 52,500. So only bullets 1, 2, and 3 give us our assets. So we have 560 plus 140 plus 157,500 will give you how much? How much? 877,500. 857,500. Okay, what else do we need to get our negative equity? Solve for all your liabilities. First bullet, we already have encountered mortgage payable in the amount of 350. Then we also have your notes payable in the amount of 175. Okay, no liability from the third bullet. Fourth bullet, we will have other liabilities of 420,000. So give me the total of the three class. 350 plus 175 plus 420. 900. And how much is the difference between 945 and how much was it? It's 87,500. Are you sure, class? It was 857, 500, and then that's our assets, correct? Our liabilities was 900, 857, 945. So the difference would be 87,500. And that will already be your answer, class. Okay? And I prefer that way because it's very straightforward. But alternative solution, class. You go back to our formula for your recovery rate, wherein it's the unsecured creditors that will fill the deficiency class. Okay. So what happens here is that we have assets that are free in the amount of 157,500. Okay, and then what kind of liability is your mortgage payable? Is it fully secured or partially secured? Fully secured. And remember, in your numerator for your recovery rate, you will have to add the excess on the fully secured. Do we have an excess from this mortgage payable? Yes, because the security is 560 and the liability is only 350. There is an excess of 210. And that 210 will form part of your free assets class. Okay. Next would be, what's the second thing I want you to remember for your net free assets? Don't forget to deduct the liability, unsecured liabilities with priority. And are we given with that amount in this problem? Yes, which is your 52,500. And that will be how much? Your 157,500 plus 210 plus 52,500. How much will that give you? 315,000. That is basically our net free assets. The cash that would be available to all the unsecured creditors without priority. Okay, so to get the amount of deficiency, then we determine how much liability will be paid using our 315. Okay, and what liabilities will be paid with our 315,000? The unsecured without priority, which is the fourth bullet class. How much is your fourth bullet? 420. But again, only those that are without priority. Does the 420 include the with priority? Yes, the problem says so. 420 minus 52,500. That will give you how much? 367,500. But again, what's the one thing I want you to remember for your denominator in the recovery rate in solving for your total unsecured liabilities without priority? Add the unsecured portion of the partially secured liability. Do we have a partially secured liability here? The second bullet, correct? The liability is 175 and the security is only valued at 140. So there is a unsecured portion of 35,000. You add that with your 367,500, you would get total unsecured liabilities without priority of 402,500. And these are the remaining liabilities that we will have to pay for. And how much cash or assets do we have to pay off this 402,500? We only have 315,000. How much now is the difference between the 402,500 and the 315,000? 87,500. Okay, but again, I prefer that you just approach this using the basic accounting equation. The deficiency is simply your negative equity. Let's proceed to problem 6-26. Class, Please do not be confused because of how 6-26, 27, and 28 are going to be answered, class. This is very technical already. These are the amounts that will appear in the statement of realization and liquidation, class. This is not necessarily the approach we've been doing, class, to simply determine the amount to be paid. This is very technical. Now we are asked what amount will appear in this column, what amount will appear in this part of the statement of liquidation, realization, and liquidation. Okay. So basically, the first question here is how much are the total assets? So basically, you're just trying to determine how much assets are you starting with. Okay. So if you're asked for the amount of assets to be realized, we're not dealing with the fair value yet. We're just dealing with the valuation coming from the liquidating entity. Okay. How much assets are we starting with? So basically, you're just going to add all the assets, class, but not yet based on their fair value. We are looking for the starting point, which would be the balances as reported by the uh, reporting entity. So for example, class, we start with the inventories, class. The inventories were, no, the inventories were already sold. Uh, they were sold for 75,000 and the value is 60,000. So at the start of the liquidation process, class, we had inventories in the amount of 60,000. So we will include that 60,000 as part of our assets to be realized. We started with inventories with a value of 60. But during the liquidation process, what happened? These inventories were sold for 75,000. But since the question is asking for assets still to be realized, we will be using the 60,000. Okay? And then during the liquidation process, the trustee was able to sell the marketable securities of 10,500 for 12,000. But here, sorry, that how much was the price? 10. The initial value is 12,000, but it was sold for 10,500. So our starting point for this investment would be 12,000. So for our assets to be realized, we will be using the 12,000. Next would be your receivables, class. How much is our receivables to be included in the assets to be realized? Is it the 21, the 47, or the 38? It will be the 38. Why not the 21? The 21 was the amount collected after the start of the liquidation process. How much was the initial receivables we had at the start of the liquidation process? 38,000. What is that 47,000? Those are additional receivables after the start of the liquidation process. But again, if the question, class, is assets to be realized, again, at the beginning of the liquidation process. Okay. So I want you to understand that our previous understanding of the computation before will not be applicable in answering this specific question. Because again, this is technical already. This is specific to your statement of liquidation, statement of realization and liquidation. Okay, so basically, we are trying to answer a new question which we have not yet answered before. Okay, so it would make sense that our previous concepts would not be applicable here. I hope you understand. Okay. So our starting assets for receivables would be 38,000. And then for your depreciable asset class, it would be 96,000. Then all you have to do is to add those four. There's nothing from letter E because these are expenses paid during the liquidation process. So you have the 60,000 value of the inventory, and then uh, the 12,000 value of the marketable securities, your receivables of 38,000, and your depreciable asset of 96,000. How much will that give you? 206,000. And that will be the amount of assets to be realized. 6-27, how much is the total assets realized? So from those that are to be realized, class, we are asked how much then was realized. Okay, so we will not include those portions that were not yet converted into cash, or those that were not yet realized. Okay, so uh, out of your 38,000 class, were you able to collect the entire 38,000? Let's start with the first bullet. Letter A, how much were we able to realize from our 60,000 inventory? We were able to realize 75,000. So that will now form part of our assets realized. Okay, and the value now will be the 75,000. We were able to realize cash in the amount of 75,000. Next would be for the sale of the marketable securities. It was sold for 10,500. Okay, so this will be included in our assets realized, and the value that will be used will be the amount realized, which is 10,500. Okay, and then uh, for the receivables, you have receivables of 38,000. Were we able to collect the entire 38,000? No, we were only able to collect 21,000, and it is this 21,000 that will form part of our assets realized. Now we have here new receivables of 47,000 class. What could be the possible source of this one class? Okay, but yes, from the possibly from sales, and definitely class. Uh, this will be included because what does this amount represent for letter C? These are receivables that are already collected. Okay, so this will form part of our realized uh, assets. Okay, so we will add the 47,000. Okay, any realization from the depreciable asset class? The answer is no. Okay, it was not sold. So our realized assets will just be the sale of the inventory, and then the marketable securities at 10,500, 21,000 of the 38,000 old receivables, and new receivables of 47,000. How much will that give us? 100, 153,500. Okay. Next question is how much is the net gain or loss during the liquidation process? So basically, we will just have to sum up everything, class. Uh, what transactions resulted in a gain? We have the inventory. Uh, there will be a gain of 15,000. And then uh, sale of the marketable securities, class. Gain or loss? Loss of 1,500. Collection of receivable, class. Does it result in a gain or loss? Collection of receivable? No. Okay, so that will not be relevant in our computation for the net gain or loss. Next, how about for information letter D? Will that have any effect on our computation of uh, net gain or loss, class? Yes, for the depreciation expense in the amount of 16,000. Next, payment of the old payables, class. Will that result in a gain or loss? Payment of existing liabilities? The answer is no. But we paid something else for the trustees' expenses. Will that affect our computation of net gain or loss? Yes. Okay, so that would be additional loss in the amount of 4,300. So we had a gain of 15,000, loss on the sale of the marketable securities of 1,500, depreciation of 16,000, and uh, liquidation expenses of 4,300. How much will that give us, class? A net loss of 6,800. And just for us to find connection with the problem 6-26 to 6-28, let's skip to problem 6-30. Okay, so basically we can approach this class as a T account lang class. But instead of individual assets and liabilities, we'll have one T account for your assets, one T account for your liabilities. Or you could actually go further class, one T account for the entirety of your company. Let's just do it separately. Assets to be realized class, you can perceive this as sort of your beginning assets class. Where do you place your beginning asset class in your T account? Debit side. And then assets acquired generally represents increases to your assets. And where do you place increases to your assets class in the T account? Debit. So you put it in the debit side. Then assets realized are basically those assets that you have disposed of, assets that you have derecognized. And the recognition of an asset will result in a what? A debit or a credit class? Credit. So that amount, assets realized, will be put on your credit side. Then basically, you can view your assets not realized as the ending balance class. Okay, so basically, assets to be realized would be your beginning, and then assets not realized would be your ending balance of your assets at the end of the reporting period. And your assets acquired and assets realized would be the ins and outs of your assets during the year. I hope it makes sense to you. Assets acquired are basically increases to your assets, while assets realized are the disposition. So this would require the recognition. This will require a credit to your assets. And you can use the same T account and just extend it for your liabilities class. Liabilities to be liquidated will represent what? Will represent our beginning liabilities. These are the existing liabilities that we expect to liquidate or settle during the liquidation process. And where do we place the beginning balance of liabilities class? Credit side. Okay, again, you can just use one T account for all of this. Next, liabilities assumed. What happens when you assume a liability class? Your liability will increase. And where do we put increases to your liabilities? Credit. So you put that on the credit side. Because I hope you're not putting the phrase on the T account, because I hope you're putting the figures class. Okay, we're going to add them afterwards. Liabilities liquidated. What does this mean? These are the liabilities that are already settled. Okay, and what happens to liabilities that are settled? They will have to be derecognized. And where can you see the recognition of your liabilities? Will it be found in the debit or the credit side? Debit. Okay, when you pay off liability, the liability will be debited. Then the liability is not liquidated. I hope it makes sense to you now, class. This will represent your basically your ending balance of your liabilities. These are the remaining liabilities after the liquidation activities during the year. And basically that will be your liabilities to be liquidated next period. Okay, so where will you place the liabilities not liquidated? Ending balance of liability class in the T account, where will it be found? Debit side. So you put that on the debit side. Now you have here supplementary credits and supplementary charges, basically gains and losses class. Okay. Uh, I hope I do not have to tell you where to place the supplementary credits class. Where should you place that amount? In which side of the T account should the supplementary credits be placed? Why are you not confident to say it will be placed on the credit side class? It will be placed on the credit side. Supplementary credits will be placed on the credit side. Then supplementary charges. Charges normally would be a debit. Okay. So you place the 468 on the debit side. Can you give me the total for the debits and the credits? Total debit, 168. And then your total credits would be 1 million, 1,800,000. Which side is greater, class? Debit side. And what does it mean if the debit side is greater? You have a loss. Okay, the charges, class, are greater. Okay. How much is the difference? 168,000. Yeah, but to be honest, class, when I was a student, I did not realize why. I did not understand why is this amount on the debit side, why is this amount on the credit side, and we were not explained why. I just, I had no option. I just have to remember this one is on this side, this one is on the other side. But after looking at this one, it actually makes sense, class. Assets to be realized. Basically, this is the beginning. Assets not realized would be the ending. Liabilities to be liquidated, beginning. And it did not appear very, it did not make sense a lot when I was a student. Okay, when you try to rationalize the amounts to be realized or to be liquidated, you get confused because they have different treatment without realizing that they are different because they occupy the different side of the accounting equation. Assets acquired basically again increases. Okay, so there's no need to memorize the solution here. You just have to understand what this amount represents and be confident that supplementary credits go to credit side. Next, what is the ending balance of your cash? Here, you can answer this by using your basic accounting equation, class. There's a long way of solving this, but you can answer this by using the basic accounting equation, which is your assets, liabilities, and equity. But here, we're asked for the ending cash balance, class. Okay, so di ba we have determined, we have identified our ending asset balance, class. How much is our ending asset balance? Assets not realized, how much? 150. And then that will be on our asset side. And then equal to liabilities plus equity. How much is our liabilities ending? 400. That's liabilities not liquidated. Okay. So next would be our equity. Are we given with our equity, class? Yes. Capital stock of 300 and then retained earnings of 120. So how much is that? Total equity now would be 420. Total equity is 420. Total liabilities is how much? 450. Ending, that's how we're talking about ending. Uh, 450 plus 420 will give you how much? 800, 870. And then, how much was on the other side of the accounting equation? 150. So that means the balancing figure there, class, would be your cash. How do we know? How do we know that the 150 does not include cash? Because you do not realize cash, class. Cash is already cash. The point of realization is to convert your other assets into cash. Okay? So if the right side of the accounting equation is 450 plus 420 and the left side is just 150, so you will have the balancing figure would basically be your cash. So how much, class? 870 minus 150, how much will that give you? 720. And that will already be the ending balance of your cash. Next, let's go back to problem 29. So problem 29, we're going back to everything what we have been discussing, class. So we're not focusing anymore on the statement of realization and liquidation. First question, what is the amount expected to be available for unsecured claims without priority? Let's answer this last. What is the expected recovery percentage? Let's answer this first. What is the total estimated payment to creditors? Let's start with the recovery rate, class. What do we need to solve for the recovery rate? You need your net free asset to be divided by your total unsecured liabilities without priority. I have 8% in my battery, class. We'll have to finish this in 8 before my battery runs out. Or I can just choose to charge. It would have been more thrilling if we just tried the... First would be to start with your free asset. Let's identify which asset here is free. Cash is normally free, class. Accounts receivable, is it used as a security? Yes. It is used to secure your notes payable. Okay, so that we will not include that in our starting point. Inventories, it's a free asset. Property, plant, and equipment, it's not a free asset because it is used as a security for your mortgage payable. So we have two free assets, our cash and our inventory. Which valuation is relevant here, class? The book value or the realizable value? So for cash, 40. Because what if the problem does not give you the realizable value of your cash? Are you expected to know the realizable value of cash? Yes, it will just be its face value, which is the same as its carrying amount because its carrying amount should be its face amount. And the face amount is simply its fair value. So 40,000 plus 140. That will be our starting point. That will be our free asset of 180. What are the two things I want you to remember for your numerator in the computation of your recovery rate? Do not forget to add the excess on your fully secured liabilities. Excess from your fully secured liabilities. Which one is fully secured here, or do we even have a fully secured liability? The notes payable is secured, correct? It's 200,000. How much is the value of the security? Less than 200. So this is partially secured. Mortgage payable is 440 and the value of the security is 560. So this is fully secured. And how much is the excess? 120. Okay, the 120 is just the difference between 560 and 440. The 120 excess will be made available to all the other creditors. What's the second thing you should remember in your net free assets? Do not forget to deduct the unsecured liabilities with priority. Given in the problem, yes, in the amount of 160. So our computation now would be 180 plus 120 minus 160. How much would that give us? 100, 140,000. Next, we move to the denominator, which is our total unsecured liabilities. We begin with liabilities that do not have any security, and that is your unsecured accounts payable. Okay, we do not include the 160 because it is with priority. 300, but what's the one thing I want you to remember for our denominator, class? Do not forget to add the unsecured portion of your partially secured. The partially secured here is your notes payable in the amount of 200,000, and the security is only 150. So the unsecured portion is 50,000, which will participate in our other assets together with the accounts payable. So our denominator here would be 300 plus 50. That will give us 350,000. And the numerator was 140 divided by 350. That will give us 20%, 40. 40%. And that will now be our recovery rate. And that is already in bold. Am I correct? It's in bold in your book. So the answer is 40%. Next question, class. How much will be paid to fully secured creditors? What if that was the question? How much will be paid to fully secured creditors? The answer would be 440,000. Again, no need to solve. They will get 100% of their claim. Next question. How much will be paid to liabilities with priority class? 116. No need to solve because they will get 100% of their claims. Next question, how much will be paid to our unsecured accounts payable? How do we approach this one? Simply multiply the 300,000 with the recovery rate of 40%. That will give you how much? 100, 120,000. Next question, how much will be paid to your partially secured creditors? The notes payable is 200, secured up to 150. The unsecured portion is 50 to be multiplied with the recovery rate of 40%. And that will give you 20,000. Added with the 150,000 security, total payments to partially secured will be 170,000. Give me the total of the four, class. 440 plus 160. And then pila tong payments to accounts payable, class, 120. So 440 plus 160 plus 120 plus 170, how much will that give us? 800. And that will already be the answer to number 3, class. Now the question, so the answer number 3 is 890. Basically the sum of the payments to the four groups of creditors. Now the issue now is number 1. What is the amount of expected to be available for unsecured claims without priority? Okay? If this was an open-ended question, class, some of you would have answered 120, focusing only on the unsecured without priority. But what is number 1 asking for, class? You're asked to include the unsecured portion of the partially secured. And how much was to be paid in the unsecured portion of the partially secured notes payable, class? Diba it was 20,000. And how much is payments to the unsecured accounts payable? Diba it was 120. So 120 plus 20 will give you the answer of 140. The issue now is, how do you know what is being asked if it's an open-ended problem? For me, the keyword here, class, would be available. If it asks for the amount available, that means you have to include, basically, you're asked to include your net free assets. The amount available to pay them would be simply your net free assets. Was our net free assets 140, class? Yeah, it was 140 divided by 350. So if you're asked amount available, you're asked for your free asset or simply the total amount available to unsecured liabilities, which means you will include the unsecured portion of your partially secured liabilities. Okay, if it uses the word available. Number 3, supposedly, class, if you're asked total payment to creditors, it will just be your total assets, class, at their realizable value. Let's try to check if that's the case here. You add 40, 150, 140, and 560, 700, 890. Because basically, class, what we will use to pay off our creditors would be the assets that remain with us. Okay, so the remaining assets would be 890. Okay. Now I bring your attention to problem 6-22 class. But you get the point, class. If you're asked how much is the total payments to creditors, it is simply the total realizable value of all your assets because that's where we are taking that's the source of our payments. In 6-22 class, if you add all your assets in 6-22, it's not, the answer in 6-22 is 180,188. But if you add all your assets, class, it will not be 180,188. I think it's 180,410. Okay, but so why then is the answer not consistent with what we have established in problem 29? It's because in this problem, the recovery rate was rounded off, class. So the answer in 6-22 was based on the sum of the individual payments of the four groups of creditors. In 6-22, they computed the amount paid to fully secured, amount paid to liabilities with priority, amount paid to partially secured, amount paid to unsecured without priority, using the rounded off recovery rate. And if you add all those four payments, it will give you 180, 180. Supposedly, your total payment, what happened in this problem is that there's an unaccounted amount. Maybe it was pocketed by the liquidator. Okay. So what I'm trying to point out, class, is that be careful if the recovery rate is rounded off. Because if the recovery rate is rounded off, the total payments to creditors may not be simply the total value of your assets. Why did it work in problem 29? Because our recovery rate was not rounded off. Okay, so just be careful for those kind of situations. Uh, let's end here.